If you watched our most recent GME video, then you know that I had three main theses on why we have not seen this quarterly run-up that we have seen in the past, and mainly regarding OPEC, and there was a lot of other stuff that was kind of going on. So the first thesis was that they changed the rules, and they did do some sort of rule changing regarding settlement dates. And I don't even think the people who made the rules know what they did. It was a complex variety of jargon and probably one line in there that actually says what they actually did. Two was that there was a margin call, and that's kind of what we're going to talk about in this video today. And if there was a margin call, it would make sense, because if you get margin called, you have 15 days to come up with the capital before you are forced settled. And that could be what we're seeing today. A lot of what we're seeing is just extraordinarily low volume. I mean, historically low volume on these GME stocks. And I don't know exactly what that means. It could be because of all the direct registered shares and just going down, these market makers driving down, going short volatility, but I think there could be something deeper than that. Justin, what are your thoughts on this?
When it comes to where we're at in GME, I try to focus on milestones. The thing I find interesting right now is the lack of volume, but I also think that absence of evidence is not evidence of absence. And if, for whatever odd reason, the volume is being met on other exchanges, whether it's through a dark pool or some other, clandestine mechanism, which I don't fully understand, could be the case. I don't know what to make of that. I do think that it is interesting to note how the rules have changed and changed quickly versus, a more traditional, hey, we're going to publish a rule change. We're going to have, 30 days to comment on it versus, hey, this rule's going live and it's going live right now. I find that to be particularly interesting. And the last thing that I'll say is I think one of the key milestones when I think about where we're at in all of this is what's going to bring down the system, whether it's GME or whether it's, the silver manipulation or whatever, just pick any, system that this will apply to. I think it's going to be the players within the system going to war with other players in the system. So in the GME context, that would be if, let's say, the option market makers suddenly freak out, ramp up their delta hedging efforts. In other words, they have to start buying shares. And that somehow runs into an effect and goes afoul of the people who might be short or have covered their shorts with synthetic shares on the other end. In other words, you've got, these various fiefdoms, if you will, that are backed by, very powerful, very sophisticated, very well-funded companies. And these companies are very good at doing what they're doing. And they can kind of exist each in their own little bubble, as long as those bubbles don't interfere with each other. This is where it gets back into, PiFi or GERK, I should say, is an excellent example of this, because if retail goes and starts favoring, far dated call options that are in the money, that in theory could pit the options guys against the people who are short. That's assuming they don't change the rules. And to go back to something you just said, Josh, a second ago, yeah, they might have 15 days or 2 weeks or whatever, roughly, to cover their position. But that's assuming there's no rule change. That's assuming there's no backdoor deals that are done. If this thing goes off, the entire system, and when I say system, what I mean is anyone who would touch equities, bonds probably, or whatever, is going to be impacted, and probably not, or there's probably going to be more losers than winners in the end here. So there's an incredible amount of, I think, incentive for the system to work to preserve the system. And I don't think the system can flat out cheat, but the system can probably do everything it can to drag its feet and hope that something happens between now and then.
Position themselves in a way. I was watching the movie Margin Call yesterday, and right when they were aware that these mortgage-backed securities were just absolute dog shit on their balance sheet, and if there was a scenario where volatility in these markets increased more than they did historically, then not only their entire position would blow up, but if there was just a 25% move against them, their entire bank would be blown up. So when they figure this out, what do? If a scenario like this happens, and during the time where they figured this out, volatility already was creeping up on that historic trend line to where they would have to get out of their position, and they physically wouldn't be able to. So when they figure this out, they do one thing: they dump everything, and they get all this toxic garbage off their balance sheet to whoever will buy it on 50, 60, 70% on the dollar, that literally just get this off my balance sheet so I can survive to see another day. This was not what caused the movement on the actual price. This was all behind the scenes. And if you looked at the mortgage-backed security market, there really wouldn't have been too big of a difference until after they dumped their position. And then there's no buyers left because they were one of the biggest buyers left. So if we were seeing a scenario where there is a margin call, I'm sure these guys are going to get everything off, all the toxic stuff off their balance sheet in the most swift and diligent way that they can, or offset it in some way. So I would not be surprised if we saw, let's say, if they knew that GME was going to blow up, I would not be surprised to see them loading up on calls or something to kind of hedge their position, or doing some sort of financial engineering to make sure that they will be okay.
Yeah, and like from the accountant in me would say that I think they actually already have gotten it off their balance sheet, although they still are responsible for it. So this is, I mean, you can go back to maybe Enron back in the day and look at that. So if, a certain Chicago-based market maker might have a bunch of obligations that are due. If those obligations are then transferred to a correctly legally structured subsidiary, perhaps in a foreign jurisdiction with a foreign set of rules, and the I's are dotted and the T's are crossed, this is the way that you can kind of use the regulations to still stay within the letter of the law, even if you're not staying within the spirit of the law. And going back to the scene from margin call, the issue on that, and same thing with mortgage-backed securities, was that these things were being pledged as collateral, and so people were borrowing against them, or people were extending credit to people who had mortgage-backed securities with the assumption that, well, if this person doesn't pay me back, I can just take this collateral. It's these mortgage-backed securities. And the net of the mortgage-backed securities was that you had something that was incredibly risky that was repackaged and presented as something that was not risky. Anyways, taking this back to the GME saga, I think it's maybe the opposite side of the same coin, where you have a liability that's been repackaged to not look as toxic as it already is. In other words, we're not naked short GME. Rather, we've got, we might have a short position, but hey, let's say we've got these futures over here and we've got this stuff over there or whatever. It's not nearly as bad. And even if you, my fellow market maker or my fellow regulator or whatever, right, you might know that I'm just full of bullshit in this regard, but we all know that when this party stops for me, it's stopping for you too. So never forget that. And I don't know what to make of it, but going back to, the dates and all that jazz and the technical analysis, I find it fascinating to follow. I think that there's something there, but I think that due to the particular nature that we find ourselves in, the paucity of information, the flat out lying and manipulation that I suspect is going on, I'm not quite sure, how much we can rest on it. We all might know how to do math, but if we're getting the wrong numbers, because the wrong numbers are being told to us, we will get inherently the wrong answer, even if we're doing the math correctly. Point is, looking for roadmaps or looking for signs to go through. And when you have, the big players, the market makers facing off against the market makers, that's, I think, maybe the opening public salvo of that. Or to take it back to margin call, this is when, whatever the firm, I think it was a made up firm or whatever, but whenever Jeremy Irons' firm made the decision to dump the mortgage-backed securities at whatever the cost, that's an example of, like a civil war within the financial system. Like, we want to get this off, and we don't care if we hose over all of our other colleagues and peers. It doesn't matter. As long as we survive, we're good.
Yes. All right, guys. I don't have any more thoughts, but if there is a margin call, it will be very spicy in the next 2 weeks. If not, then me and Justin will cry ourselves to sleep.
No, it's not only that, but also, like I said, don't put too much emphasis on dates because, the rules might say 2 weeks. But if everyone in the system, including the people whose job it is to enforce the rules, know that this is going to be problematic, I'm not saying they won't enforce the rules, but I am saying these people will know just exactly how to bend the rules, so whichever way. So again, don't focus on dates. I think focusing on milestones is a much more productive way to go about it. That's just me.
Yes, and we certainly have seen a lot of milestones. Something that really makes me think that we're getting closer to the end is because I see so much FUD. This fear, uncertainty, and doubt. It's the contrarian in me is, even just watching Pi-Fi streams, there's a direct correlation between the sentiment of the current GME situation and how many views he gets. And I kind of like to base that upon what I'm doing. And his views have been tanking. And to me, that probably signifies that there's not a lot of momentum in GME land right now. And I love to see that. I've personally not picked up any new calls because I have a massive position size, but it does keep me comfortable, as usually if we start to see some weak hands start to shake out, then I think we're a lot closer to the end than the beginning.
Two things on this front. The first thing is there is some tie into crypto. If I could talk to Jocelyn just in the future and assume we couldn't be told winning lottery numbers, that would be one of my questions is what's the tie into crypto? There's some tie in there. Point being, genuine BTC pumps, GME dumps, and vice versa. There's your collateral tie-in, or that's what I suspect is a collateral tie-in. Another video. Let's just gloss over that for the time being.
I think
But
I'll make the argument, okay, right now GME is trading very similar to the NASDAQ. Bitcoin has been too, but we just saw the divergence from Bitcoin to the NASDAQ. And if GME is just the speculative stock that it is, then it makes sense that they would just start to be inversely correlated recently. I mean, I'm just saying that's, I think, some pushback that you could get from somebody.
that could be the case. It's one of those. I don't think it's a 1-to-1 ratio, or I guess a 1-to--1 ratio. But there's something that's there. So when I talk about roadmaps, I'd be very. If you see like a major correction in the crypto market, I'd be very curious to see GME price action the next day. So that'd be the first thing. And the second thing is this: you didn't have, or at least we have not yet, had the run up, from the prior cycles that we've seen on this. And so I think about that, and I think to myself, why hasn't this occurred? And the conclusion that I come to, I've said it before and I'll say it again, the people who are short, they have a lot to lose and they're not stupid, they're incredibly smart. But I do think they have a variety of tools in their tool chest to deploy for this. I think that we're not using, I think that they are not using their first choice tools, because if they could have kept the price down like this from the get-go, they would have kept the price like this down from the get-go. The fact that it ran on multiple quarterly cycles and it's not running right now, I don't see that as evidence that the shorts have closed. Again, I don't see the volume to back that up. And from my poorest of poor
In
understandings.
fact, there's much less volume.
Rather, what I see it as getting more and more desperate in order to do this. So, for example, again, this is Pi-Fi is the one to go to on this, but as I poorly understand it, if for whatever odd reason these guys are just cranking up their internalization, ripping apart XRT or similar such funds in order to do it, it's like a Hail Mary. So be it, that might be the case. But in order to do this, they might expose themselves to having a hell of a lot more collateral because if they're short or synthetically short or whatever, right? The point is that if they're going to continue to go out on margin, they have to have something to support the margin. That's where I think the crypto connection comes, or that's part of the crypto connection, I think. But whatever.
Yeah, I mean, it would make sense. Yes, we did see Mr. Mail Lover himself come out today and be a massive crypto bull, saying that it is the future, and that could definitely put some more evidence in Justin's thesis, because if they are using this as collateral, they would, of course, be doing anything they can to artificially prop it up.
Yeah, or they have to. Because if their collateral implodes upon themselves, it's like the mortgage. It would be the scene of the mortgage-backed securities imploding upon themselves.
Yeah.
And problems. Anyways, optimistic video.
Yeah, I mean, there's not, this is all just game theory and thought abstraction. Don't take any of this too seriously or with any sort of financial advice, because we don't really know what, this is pure speculation and there's no evidence to back any of this up. We are just trying to put some of the dots together that we do not yet have. So guys, without further ado, we thank you very much.